Thank you, Kristalina Georgieva, for joining us in today's show. Can I begin with, you attended the debt roundtable in the morning. What kind of a solution are we looking at?
For the first time, we are bringing all creditors, new and old, public and private, and debtor countries to discuss debt resolution. Without bringing everybody, it is very difficult to overcome what has become serious obstacle to fast and fair debt resolution. And I am very encouraged by the active participation of all this morning, as well as the commitment of the private sector to listen to everybody else, as well as to the debtor countries. We have set up an agenda for working in the future that is very practical. It concentrates on matters that require resolution and would help make progress faster.
If we look at US and their central bank's assessment, they're still talking about tightening further. And that has ramifications for emerging economies such as India. We have pressure on our currency. How do you sort of see that really playing out? What's your take?
But this is when good news may turn into bad news. The fact that the US consumer is spending and the economy is working and the unemployment is incredibly low, historically low, means that the job of the Fed to tighten and bring inflation down is harder. It is very important, though, that the Fed stays the course. Why? Because if we do not return to price stability, that is a big impediment to growth, to investors to invest, to consumers to make long-term purchases. What is the impact for the rest of the world? Of course, that makes it harder for emerging markets to see their currencies appreciating, and it makes it harder for emerging markets to fight inflation on their own territories. But what we saw here, and this is why this G20 meeting is so important and so useful, is that we all can identify collectively what is the course to follow and how to do so with best possible outcome for the world economy.
The IMF, in its assessment of Indian economy, and you also, have at various fora said that India is a bright spot. Do you think the focus on macroeconomic balance has helped the country?
Oh, it has helped tremendously India. The focus on reforms that we have seen over the last years, with very, very dramatic, very important systemic reforms, especially on the tax harmonization side, on the way India pursues digitalization, that has played a huge role for India. India is offering the world a concept of using public digital infrastructure as a foundation for both public services to improve and private sector to blossom. We are very keen to use our engagement during the G20 presidency for sharing these lessons from India. And I'm very encouraged to hear Prime Minister Modi not wanting to stop here, but to go further, especially in using the talent of women in India. We know that India's growth can go higher if women participate more fully in the economy, and all the steps that are taken in this direction are really excellent.
Absolutely. South Asia's, there are concerns in the region, especially with regards to debt. Is IMF in a position to help all the countries around India?
What we see is a very high demand for IMF to engage with countries, and rightly so. We have 4 countries in your neighborhood that have come to us for support: Sri Lanka, Bangladesh, Nepal, Pakistan. We are working, of course, in the specific circumstances of each of these countries accordingly. And I am very grateful to India for also being engaged with us in especially the case of Sri Lanka. It is impossible for even a strong and large country like India to be an island of growth and prosperity surrounded by a sea of insecurity and poverty. So working with the countries around for them to implement reforms, for them to have the prospects for high growth, this is paramount. I want to praise Bangladesh, because what we have seen in Bangladesh is the smarts to come to the fund preemptively, not because problems have been accumulated, but because it is uncertain time and problems can accumulate. Our program with Bangladesh is an example, hopefully for other countries to follow. They also tap into the new concessional instrument of the IMF, the Resilience and Sustainability Trust, that helps a country highly vulnerable to climate change to build resilience to future shocks.
Can a regulation be evolved for, intangible assets like crypto assets? How does it work across countries?
So when you look at this world of digital money, on the side of CBDCs, the biggest issue is interoperability. Can different platforms allow us to still go with cross-border payments? And most recently, India and Singapore agreed on that kind of cross-border payment. So this is a very important place for policies to come to work. And then on the other side is, how do we allow the crypto world to continue to evolve? There is a technological aspect of it, but there is also a policy aspect. For example, protection of data, the ability to protect consumers from risks. What could a meaningful regulation be? Of course, first and foremost, transparency, information about risks. So you as a consumer, you can differentiate a stable coin that is really stable from one that is not. And then giving a good sense as to how exactly transactions are going to be done and monitored in a world in which, as you said, this is not a tangible. This is not like a note that you can hold in your hand.
Yes.
But it doesn't mean that it has to be left to be a wild west. We do have to have principles and regulatory frameworks in place. And so we are now being charged, the Financial Stability Board, IMF, Bank for International Settlement, to work on these frameworks.
How soon can we have this come?
Well, in fact, at the IMF, we have already defined 9 areas that are related to macro, financial, legal, and cross-border issues that define the work that is already being done and what more has to be done. So I'm very mindful that we have no time to waste, that if anything, we have to run faster in this area. So you would see at the next G20 meeting a very substantive discussion on this topic.
Well, great. Thank you so much for joining us and giving time to the Economic Times for an interview.
Thank you.